Well, from cuddly creations to cash flow, Build-A-Bear has managed to stay relevant with consumers even as the retail landscape shifts. CEO Sharon Price John joins us now, along with my colleague Brooke DiPalma. Welcome to you both. Sharon, it is great to see you, especially on set. We're always looking for lines of sight, Sharon, into the consumer, right? As investors, you certainly have that. So I'm curious what you're seeing with the consumer, just based on your business. How healthy, Sharon, how resilient they look?
Mm-hmm. Well, as we shared on our second quarter call, we did see increased traffic and good conversion, and we have not seen what some consider to be, impending softness right now. So far, so good. Mm-hmm. We really haven't shared much about the current state, but on a quarter-to-date basis at the call, we still had seen some good momentum. And we just recently shared that our Halloween collection is the best-selling Halloween collection that we've ever launched. So people they're out and about. It's good, but I think some of it has to do with consumers wanting experiences as much as products now, and I think there's a return to comfort products, and there's a rise of the adulting business, and that's in the toy industry overall.
Yeah. Yeah, and it's interesting to see that consumers are just so willing to pay for something that they think is worth paying for. I do want to hit on another headwind that is facing the industry overall, the toy industry, and that is tariffs. Now, Build-A-Bear is expecting about an $11 million hit from tariffs. You guys, it pulled forward inventory before April. Now you have to get in that inventory for the holidays and ongoing. So walk us through where that hit is happening, where you source from, and how you plan to mitigate that impact.
Yes, so thank you for noting that we did pull forward that inventory. We made some estimations that there probably would be some level of tariffs early in the year. So we were able to avoid most of the tariff impact in the first half.
Now the big 145%, right?
Yeah, well, there was 145, and then it went through a number of iterations, and we're at much lower rate now. We import most of our products from a combination of China and Vietnam, but both of those countries are impacted by the current tariff levels. And we believe that for the foreseeable future, that will remain the same. And in the back half, what we've done is as we've done over the years in all of our profitability challenges, is we really do know how to manage our balance sheets, extremely clean balance sheet. We maintain a lot of focus on the bottom line. And we do that by really having a scalpeled approach, not only to every link in the value chain, but also in price increases. People have often asked us, well, are you raising prices? And the key for us is to not raise them in a blanketed way. We really look at the individual products. Recall now 40% of our sales are to teens and adults, and so there's a lot more latitude on some of these collector items. And we're always focused too on the entry-level price points being extremely approachable, and we keep our pay your age day for our birthday teddy bear so that you can come in no matter what age you're turning and pay the age of the bear. If you're 6, you're going to turn 6. That's still a part of our offering because it's important to us for kids to be able to have their Build-A-Bears.
Sharon, I do want to put on a bit of a different hat of yours. You also serve as the chairperson for the Toy Association. And heading into these holidays, I think there's lots of consumers out there who are nervous that maybe the product that they want won't be on the shelves. What are you hearing from the many toy makers that are part of that association, and how are you working with them to mitigate that risk?
Right, that's a really great question. And the toy industry is very interesting in that the vast majority of the companies that are in the Toy Association are small to mid-sized companies.
Okay.
So that's very, very different from some like the big organizations that you almost immediately think of with the household name brands. And so they're managing this in different ways because the smaller companies are really cash flow companies. And when the tariffs came out early in the year of the 145%, not just in the toy industry, but that did seize up a lot of Chinese manufacturing. And then once the tariffs reduced to some degree, there was then an influx into the ports. So that was still a little bit of a challenge. And even in those circumstances, unlike Build-A-Bear, we're a vertical retailer, so we don't have a price that we've set with a wholesaler that's oftentimes pre-negotiated and maybe even in a contract, right? So the price that you're getting out of China, a lot of times the smaller companies can't afford to even get it out of the port, and then they're not going to cover that cost because that was a pre-negotiated price with the wholesaler. So it will likely squeeze some of the inventory, but when the tariffs did come down to a more manageable rate, but remember, this is a tight margin industry, so when I say manageable, it's still not great, but clearly it's better. That is going to likely impact how much product could just get through the system in time because everything was delayed. So I think that there'll be things out there and there'll be fun items, and I'm sure people will find what they want under the tree. But and I'm hopeful that it'll be exactly what every kid wants.
Sharon, it's interesting because Trump imposes these tariffs. Why? Because he wants more stuff made here. I'm just curious, broadly for the toy industry, how financially viable is that? How much more can be made here?
Some companies have been able to shift some parts of their manufacturing into the United States. The challenge is not that you can't make things here exactly. I mean, the toy industry is everything from cut and stitch to plastic goods to electronics. So there are ways that you can do it. But the challenge is, just like with any company that wants to move manufacturing to the United States or anywhere, that requires a certain amount of horizon and certainty about how long is this, are the tariffs going to be in place and at what rate? Because it takes more than 1 year or 6 months to move manufacturing and train people and make that a viable concept. Now, interestingly, and people often don't think about this, Build-A-Bear, for the most part, we are importing component parts, right? I hate to say it this way.
The heart, you got the
doesn't
nose,
sound romantic.
the paws.
Well, no, it's just the whole skin. I hate to say that too, but the outside, I'll only say it on a show like this, but we do much of the labor in the United States at our stores. We're stuffing the bear, you're dressing the bear, all of that happens actually in the United States. So when we've done these calculations in the past, but up to 20% of what we do already happens in the United States, and it's just sort of a fun fact that people don't really think about.
Sharon, I do want to take a step back because your stock performance has been pretty stellar. It's about up 30% year to date. That's only 10% behind the run that a company like Nvidia has had. There's such momentum right now on the street for Build-A-Bear to continue to perform as you expand. Just quickly, what is your message to investors after they see maybe this year-to-date rise so far? How do you explain that this momentum will continue from here?
Well, the things that we've shared are a multi-pronged approach to our growth strategy that's been going on for a long time. First is the diversification and evolution of our retail base. And when we started this journey over 10 years ago, it was mostly mall-based. Now we're in hospitality, cruise ships, hotels, tourist locations. We've expanded widely around the world. We raised our guidance in our last call from expected to 50 stores by the end of the year to 60 experienced locations. We've seen pretty consistent expansion of margin over the last few years. I think that again shows the discipline, clean balance sheet, no borrowings on our credit facility. And what we've also been able to do is start this what we call the MORE strategy, which is the expansion of the addressable market as well. So when you start to expand, when you're beyond kids and you're appealing to a much older consumer for different reasons, whether it's gifting and adult to adult gifting, it changes the dynamics of what's possible from a market perspective, right? And I think that's very interesting. We've also noted that because of the power of the Build-A-Bear brand, it does not have to manifest in the make your own process. Right. So our e-com business has been quite robust, and we have a microsite called the Bear Cave, but we also can sell stuffed goods through wholesale and licensing, and it really starts to change the dynamics of what we can become. We're not as narrow, and I think that's the big insight. We have and by the way, big news, we have a flagship store that'll be in Orlando next year.
Lots of levers.
Lots of levers.
Leave it there. Thank you so much, Sharon. It's great to have you here on set. Appreciate it.
Thank you.